Hello traders, Gary Wagner here just after 11:30 in Honolulu, 5:30 in New York. It is Monday, 12th day of August 2019, and this is the daily report for gold and silver. Nice solid upside moves in both gold and silver as they continue to act as a safe haven asset, and we had equities falling out of bed today, literally trading down at about 400 points and closing near 400 points lower in terms of the Dow Jones Industrial Average. Dollar softened a little bit, but this was really the type of undertones we saw that were necessary for gold and silver to continue the climb. In fact, on today's recap letter, we speak about the fact that the highs, achieved today at about 422, 423 actually match the lows that came in November of 2011. Quite interesting. Nonetheless, I do believe we will see gold and silver move higher from this point. Let's take a look at current pricing. Traders, gold is up about $13.80. This, of course, is basis the most active December contract, $1,522.30. What is very interesting are both the highs and the lows. We'll talk about that as we look at some charts. But the low came in at $1498.60. We do have a long position in play. We are long from $1474 and change. Our stop is at 96. So we barely missed that stop being hit, and I'm grateful for that fact. The high is also interesting. 1531.5, and as you'll see when we pull up a monthly chart, it really matches with the bottom end of the range that occurred immediately following gold breaking from 1900 and then trading lower. Again, gold at $1,522. That is almost a full percentage gain. Silver also tracking higher, gaining about 11.5 cents, back above 17, and that to me is what is important at $17.04. Platinum traded lower on the day, marginally lower, losing about $3.30, $860.50 per ounce. And palladium did close higher, gaining about $4.90 at $1,424.20. About $100 now is the difference between gold and palladium is certainly not the king of the hill anymore. Gold is. On that note, let's take a look at some charts. A strong way to begin the week in terms of price moves to the upside in both gold and silver. Gold gaining almost $14. And we have some interesting facets that we do want to talk about in terms of where the highs and lows came in. First, I want to touch upon the low because that's important to our stop. We put our stop very, very tight as we moved it up last week to 1496.13. The low that came in today was 1498.60. We can see just below $1,500 per ounce. And the key is we had quite a range because we went from a low of 98 to a high of 31. So we're looking at about a $33 range on the day. Even though it closed up substantially higher, it only closed up about half of that range, or about $14. Nonetheless, we are still long our position, now entering some very reasonable profits as we are now up about $40 to $50 in terms of this current trade. Now, where could we see this market go? Well, at any point we could see a top, and we're using basically some Fibonacci extensions to kind of guide us to points in which we could see this market go. We have to use extensions because, as we talked about in the recap or opening letter, prices really haven't been in this area since it was coming down in April of 2013 or the lows achieved back in November of 2011. When we look at this particular daily chart, what we see is that we have taken out the 1.382% extension in terms of our closing price today, and that to me is extremely respectable because when we look at recent activity in the market, that seemed to be a level where we could have found a little bit of resistance as we take a look at the highs that came in over the last couple of trading days last week. With that in mind, if this particular area holds, the next real area we want to look at is the 1.5% Fibonacci extension, which comes in between 1540 and 1541 up to the 1.618% extension, and that comes in roughly at 1561. And in essence, all we're saying by utilizing these extensions is we are looking at different legs of the rally and attempting to see where this market could go. We're looking this in terms of a major count as being a wave one. Now, this is, as I said, is a long-term count, begins in 2018. Market is trading at 1166.80 and goes up to 1349 before selling off. It then sells off to about 1266, and I believe that this leg is what is our third. Third, simply put, cannot be the shortest, so it had to go beyond 1448, but typically on a very strong rally, and that's what's important because we have the makings of a strong rally. You will see an extension of about 1.618 of the first leg of the rally, or wave one.